All right, what's going on, everyone, and welcome to another episode of the Market Misfits podcast. I'm your host, Joe Polk Shiva, and once again, I'm joined by Smiddy, who for some reason agreed to do this with me every other week. I don't know why he thought it would be good to sit and talk shit or talk shop, a little bit of both with me and actually agreed to do this on a reoccurring basis. But for some reason, he said yes, which I'm really excited about. So, Smiddy, welcome to the show yet again. And how are you doing, my friend?
Doing well, man. How you doing? Thanks for having me back. Appreciate it.
Yeah. You say you appreciate it until I'm going to get a text like in a month or two, like, listen, guy, it was fun, but I'm done ranting with you, you know?
I don't know about that, dude. We're kind of in the same boat here. So I think we all enjoy it. We all need a little more trading content in our lives. So here we are. We're
Yeah,
gonna keep
absolutely.
it up. Let's see how many weeks in a row we can get this going. So
Yeah,
breaks.
right. Like that's always the key is like, what's the key to consistency and putting it all out? But yeah, I know I'm excited. So I'm gonna start here with like letting everyone know the date because that was some feedback that we got that we're talking and sometimes it doesn't come out, right away. Even though I'm gonna try to do these like record and then upload the next day, so it's relevant to the timing of what's going on. So today is March 10th. It's after the close. That me and Smiddy are chatting March 10th, 2025, for those that want to be super specific. And man, has things changed since the last time we talked. I think we spoke 2 weeks ago, kind of about what was going to happen in the market, right? Like that was when we first got the COVID scare, which that's not even talked about anymore. Like that was completely irrelevant to what's going on, right? It was just a blip on the radar.
Where did that headline go? Just literally
just
disappeared.
Doesn't
completely.
matter. Nobody gives a shit, right? And we kind of alluded to that anyway, that we didn't think that was going to be a much of a factor in all of this. But since we spoke last, I mean, we have just, I don't like to use the word tanked because it's not really a tank, but given the fact that everyone's bought the dip for the last few years, like this, for most people that haven't been trading that long, this is considered a tank to them. And it's been interesting to watch because for some of the really good traders that we even have in the room are kind of confused by all this action, outside of Jay, who, Wall Street Jesus, who's not confused at all and wants us to keep going lower because for him, that's healthy, right, to the market dynamics. So I'm curious, Smitty, I mean, what have you been looking at and seeing in all of this?
I was gonna say Jay and Lucci, who's just over here hitting doubles and triples like he's fucking, Anyway, so no, man, it was last time we spoke, I had that major gold position going on into the weekend. We took a beating on that, and then we doubled down and we took another beating. So wish I had some more fun stuff to report. I got caught up in the riffraff, especially on the metals trade because we were along silver and palladium or platinum as well. So, that hurt, right? That stung a little bit. The first chunk we lost, the first tranche of that trade we talked about on Friday. The following Tuesday, I had booked the loss. Client called and said, I couldn't talk him out of it, right? I tried my hardest. It was a late night call. It was about 10:30 at night. He said, put the position back on, and we did. So we went from up about 7% on the year to down 5%. So that's a rough swing to have intra-week. And since then, I've been kind of hands-off, which for me has been really nice. As guys, Joe and I talk all the time, markets, whether it's in the STEAMROOM or we'll do a phone call or text. But been kind of hands-off, which is nice. Watching this chaos unfold. I've got some construction going on at home. So getting the house finished up, which has been a nice distraction, because I'll pop in and see the markets, down 2% again. And I just kind of have to laugh to myself and, pull up the shopping list and see what looks good, and just have not had the conviction to buy anything yet. We were talking a little before the recording started. I'm back testing a NASDAQ futures trading setup for intraday only. So basically NASDAQ scalps. And, I'm batting like 30% on those. So not good enough right now, even with a 2-to-1 risk setup, that I'm comfortable actually putting any money and capital behind that. So got to refine my system, right? And that said, even in those setups, I'm fighting the trend here. So we've been conditioned to buy the dip. I think a lot of us younger traders have had it really easy, right? We're buying the cryptos of the world. We're buying meme coins. Everyone's getting rich in options. And when you get 3 weeks in a row of, tech selling, we don't know what to do, right? And that's when you see the maturity of the Lucci's of the world, the Jays of the world, who can sit on their hands, who can actually play the short side. We've definitely had a couple guys in the room do really well. Kelly Betts is one of them. I really wanted to pull some of his shots. I didn't want to put him on blast right off the first podcast. I need to run that past him. But I mean, dude, he had a great read Friday. And I think he was on the long side and probably, put some good money away for a nice scotch and a cigar at night. So yeah, tough market out there. Tough. And, I think it gets tougher. I don't think that I think that we're just in the first inning of this game here. And we know that, right? I think we had it easy with Biden. I joked a lot about that where, the first Trump presidency, it was easy to make money, right? Like we were all kind of in the same boat. Markets go up. Everyone just buys the dip. Things were great. He spoke a lot. He tweeted a lot, and that was awesome for volatility. But vol wasn't 25 to 30, right? We're getting into a different regime here where I think that these moves are really accentuated to the downside. And a lot of us don't know how to play that. It's, the game changes, right? It's not just a linear game. It's dynamic. So I think it's going to be tough for a little bit. Might be 3 months, could be 9. Maybe we get 18 months of this chop and people get absolutely blown out. Right. The big thing that we say a lot is, you got to have a chip in a chair at the end of the day. So don't let yourself get killed. Capital preservation is going to be really important in this next chunk of time. And eventually we're going to have a great opportunity to get super long in the market, but I'm waiting. I'm definitely waiting.
Yeah, my dogs are about just going nuts right now. So apologies if that ends up in here. But yeah, it's been a really interesting, shift in the last 2 weeks here. From when we got that initial like pullback to now it's just, kind of exaggerated to the downside. And, it's still not even, we're not really that down that much in the grand scheme of things either. Like there's plenty downside for this to kind of go to really get into like a more of a healthy, I guess, correction territory. I mean, I know Wall Street Jesus was talking on the Webby that he wants to see like 5,500 SPX, and that's when he'll get, a little bit more excited. And we're almost there. We're close. I think that Friday move was a big fake out. We've had 2 of them now. Like if you go look at the daily chart on SPX, we've gone red day to a bounce green day to another red day even lower to a bounce green day, and then that sucked it lower. And it's just been a never-ending change of basically chopping the living shit out of anybody. Which is why, like for me and my style of trading, like and this, like how I trade, but for those that don't, I primarily scalp and then I trade longer term positions. It's really tough to even play those longer ones, like leaps for 2 years out that I'm in. I'm sitting looking at them like some of them are down, 50%. And, again, I'm playing around them. So it doesn't hurt as much, but it still is. It's a hefty haircut. And you don't know how this is going to be. I don't know if this is going to last 6 to 12 months, 18 months, or if you looked at the Gamma Gang note that we got today, they're calling for 5,900 in the next 2 to 3 weeks, and we just shoot up. And that's typically what happens with a lot of these rinses. We got the staircase up, elevator down. We might get, even though I wouldn't call this an elevator down per se, right? You might get that on this side where we're constantly going down, a couple speed bumps on the way, even though the pulls have been pretty large. Especially like a day like today where we opened up at 5,700 and dipped down to 55.65. You get all these types of moves, who knows? Maybe we will just shoot back up and do it. So for my time frame and my timetable, that's why I am in and out of trades in minutes, right? When I'm scalping stuff on the indexes, like primarily NQ or something like that, I'm not holding. I just can't because I don't know what's going to happen. Now, if like today was a trend day down, so your play was to short pretty much anything that you could have wanted. And, you're going to end up lowering and make money. But it's really tough to do that for a lot of people, like traders in general, from my experience, are actually not great on trend days, right? At all. It may be in individual names, but on the indexes, it can be hard for some people in this type of regime too, even on the downside, because you don't know when someone's going to come in and buy that dip and people get scared. It's the same thing on the other end. Where, we're going up and then people see a dip. It's a lot easier emotionally to buy the dip when we've been constantly going up than it is right now to keep shorting the downside because you are, programmed to want it to bounce. So you kind of have this really interesting dynamic. And me, me, I get off on making money on the downside. This is my type of environment. I fucking love this shit.
Same.
Because not just because of making money on the downside, but because I'm looking at this from 20, 30, 40 year perspective from an investing standpoint, where I'm like, every time we go lower, this is a new, I won't call it a generational buying opportunity because it's not, but this is another way for me to lower my cost in as we've had this, wild run. But, today was an interesting day. I think everyone got shook out from those Friday longs, and, someone in our room, Kelly, who's a good trader, was calling like, hey, this is just a short-term bounce. I'm getting out of the way, right? Like I got my move.
Right.
And then others were like, oh, we're starting to bottom, right? I've never seen financial Twitter in this space talk about, oh, I'm calling the bottom. This is the bottom. We've hit the bottom. And I'm just like, man, you guys sound like you've only traded for a year. And most of you probably already have, but you can't time it. Timing a bottom is a fool's game. Fool's game.
Well,
you're going to lose so much trying to time the market. You know what I'm saying?
Right. And I'll take this from and give credit to where it's due, but Keith McCullough years back at Hedge Eye said, don't be the market proctologist, right? Leave picking bottoms to the pros. That's not something that we as retail traders should be trying to do, because this shows you where you get smoked, right? And a lot of us are in that boat where it's like, all right, I got blown out from the highs in gold. Now I'm questioning whether or not I want to buy the dip in gold, and it's only down to 2,900 basically, right?
So to pull it up, where are futures at?
Yep, back to about 2,900 flat. I think they closed the day. So again, I think the harder part, that hasn't even started to sell off yet. I do think that we get back down to about 2,800 on gold. We can get down to 2,775. I'll probably get back in that position with some size and hold that for a while.
Right.
But for now, this is a tough environment. The moves are big. I mean, from the lows today, we ran up 260 points, give or take a few, in what was that, 30 minutes? So again, if you're shorting the lows here, and that could have just been short covering, that's more than likely what we saw, is folks saying, okay, I got my hit today, I'm going to go ahead and book my gains, roll on out of here. I think we saw Lucci kind of pop in around the time that rally started, and he was booking his puts. So again, trader who knows what's going on, been doing this for long enough that he probably went to the beach, came back, saw that everyone's in pain, fucking took his money back to the beach.
Yeah, I'm out.
Happy goes, right? And good on him, right? Because, that's definitely his style here. But I'm with you, Joe. I love getting paid on the short side. It's one of my favorite things. I like to be a contrarian in general. That's why I was looking to be a little bit long today on the dips. Had I taken those trades, I would have been stopped out for sure. So happy I didn't do that. But again, I'm also content sitting on hands here. Like I'm really waiting for this to settle. I don't want to be the first 15% of the next up leg. If we are going back to 5,900, 6,000, and I agree, it could happen quickly. You've got a lot of folks in cash. I think CTAs are about flat right now. So if those guys get triggered to buy again, we're going to have a lot of money coming back in this market. Right. And that's just going to accentuate to the upside. VIX comes off. What did we finish VIX at today? 29 or so, 28?
Yeah, I think right now it's at 27.8. Yeah.
Right. So again, you hear this a lot. There's a lot of folks who say buy VIX when it's high, sell VIX when it's low. And I think that that's the right way to do it. But at the end of the day, VIX is mean reverting. So I do think that this comes back down to reality. Yeah. And when it does, we're going to have a lot of opportunity to the upside. Now, timing that, I don't have a crystal ball. So
I wish you did. It'd make my life a lot easier.
Hey, me too. We'd be doing this call from a yacht in Puerto Rico or something. We wouldn't be. We wouldn't be in our offices. So.
But what you said was super interesting there to me too, because we were having this discussion before, and I'll just to bring people up to speed. And I was actually talking to Shank about it today too. When we were looking at the market dynamics, and I'm like, man, the hard part about taking longs right now too is the cost to get long. Mm-hmm. Right? Like one thing that you're going to fight, especially on the option side, equities obviously not, but on the option side, you're going to start fighting a little bit of that vol crush as you go up. Like some of your delta is going to erode from the volatility crush you get as the VIX comes down. Right? Again, for some people, that's fine. Like, hey, I don't care. I want to catch the entire swing. I'm willing to pay the higher prices. Someone like me, I'm like you, I'm going to wait for a bottom to kind of settle. I don't need to bottom tick this. As much as I would love to say I did, and people on Twitter love to say, oh, I'm calling, I did that. Fuck off. From a retail trading perspective, it is still a fool's game, and you are much better waiting for a bottom to kind of form, get some chop for you to be able to go and take your long side. Because that's the other thing. we might not actually revert the move. We might get a nice temporary relief bounce over maybe a week or two, and then come back down and then start chopping. Like that's the whole thing on this is I don't know. I'm willing to get long when I think that the market is poised to, you know, continue in a certain direction. I prefer directional markets for me to play long options. On the day to day, I honestly don't really give a shit what we do. I care about what's going to happen in the next minute, 2 minutes, 3 minutes. That's my time frame. And in this environment, it's a fucking gold mine if you have a good strategy, like what I've been playing with my strategy that I kind of built with NQ and, you know, playing off VWAPs and looking at gamma models, right? It's been, not saying easy because it's not. It's really tough to get a perfect entry. You can't do that. But with how fast these pulls are, you know, there's times you're sitting in an NQ contract, right? And then all of a sudden you're up $500 a contract in like fucking 10 seconds. Right? You don't get that in a positive gamma environment. This negative gamma environment gives you those opportunities. And then it also takes them on the other side, right? Which is the other part of this. So you have to, I've become very, very picky on when I'm going to get into these plays. And to be quite honest, like one of my biggest indicators, gamma, has been basically irrelevant for the last 2 weeks outside of the guy that was putting on condors, because it's just so light. We're so thin. It's just price action is going to reign supreme. It's going to yank us down. It's going to bring us up. It's whatever people want. But anyways, before I go down that rabbit hole, something that happened today that I wanted to pick your brain on too. We were kind of talking about, and I mentioned this to Jay too. Something that's been really surprising is last time we got a VIX this high, I forget when it was. It's not really that important to the conversation. But when we got VIX near 30, or when we got that big pop, what was it, last year or something to VIX like over 50?
Yeah, December, right before Christmas in December.
Yeah, and then
so we had December, and then prior to that, it was back in like early August, right? And we were up at 65 when things kind of blew up. And that was the August lows, which I believe we ended up rallying all the way through the election, if I'm not mistaken.
Yeah. So what's really interesting to me, and I'm not going to share screen for this one in particular because it's easy to explain. But if you go and pull a chart of VIX, and then you go pull a chart of TDEX and overlay TDEX onto your VIX. So for people that don't know what TDEX is, it's the nation's tail DEX, which basically computes, you know, 3 standard deviation of SPY puts. And we use it as a fear gauge. And I got this from Kelly Bett in our room. For those that don't know who Kelly is, because you've never been in our room, Kelly's like runs a book and is a really, really good trader, but is very much focused on his way of interpreting the markets and his patterns and all that. But he has very good reads and he's very logical with his thinking. But me and him use TDEX very similarly because, well, basically taught me how to use it. And it's a fear gauge to him. But if you go and if you go back to December, when VIX was at the level we're at now, the TDEX spiked fear-wise to like 58.
40.
If you go, right, just nuts, right? Just an absolute,
right.
Oh, wait, no, not 4, not 50, 40.
43. But But those August highs on TDEX back when we were kind of in that blow were 113. So again, like you can see, and I recommend you guys, listeners, go pull this up so you can see what we're talking about. Pull TDEX, pull your VIX, and then pull an SPX chart just so you can kind of see that these washouts are not really even saying that, you know, we're not getting the turmoil in the market headline at CNBC yet.
No.
I'm waiting for Josh Clown to come out and start crying on air.
Right. And that's what's so interesting to me, because that's what you're talking about. I'm like, it's odd. And there's a reason behind this, and I'll give you what Jay said, but it's odd to see TDEX, you know, this low given what we're spiking. Now, it's not also, and if you look at the chart, when people go and kind of look at it, you'll see like there's a pretty strong correlation between the two for obvious reasons. So what this kind of tells me is this is much more of just a coordinated sell-off. There really isn't fear, right? Like TDEX is used purely as a fear gauge from our perspective for a black swan event is kind of the way that we do it, right? Where, because again, it's 3 standard deviation of puts, like 30 days out, I believe. You know, but they all kind of follow. It's just not right now. So when I was asking Wall Street Jesus about it, he's like, yeah, it's just a very coordinated sell. It's a healthy sell. People are getting out of positions. They're unwinding. Like, we need this. It's not necessarily full-blown fear. But here's the caveat now. because it's where it's at, what if people start getting fearful, right? If you look at today, we're up 27% on TDEX. I think it peaked at like plus 32%. There is a chance that fear does come back into the market. You see TDEX spike, and that's going to run people over to the downside. It will run them over when fear pops up, and the VIX will pop even higher. We've had a very calculated pop on VIX. If you go pull up a VIX chart and you guys go look at it, you'll notice VIX has gone up for the most part since February 21st steadily. Every other time that we've had a spike in VIX, it's gone up in a day or 2 days or 3 days, and then it comes off, and that's when TDEX spikes. This is more so just volatility increasing slowly with some sort of controlled sell, and you just know that vol products are going to be up. Very similar to why McElliott had that note, what we were talking about last time of, hey, you could buy VIX calls. Look at how they've been paying. VIX calls have been paying handsomely, right? If you took that trade off of that note, and that had a lot to do with gamma and stuff like that. But now it's just very controlled. I'll call it controlled chaos. This isn't chaotic. Really, it's not. It could be way worse. We're just in a very thin gamma environment, despite the fact that it's negative. So it'll be interesting to see kind of what happens over, the next few weeks, and see if this is all overblown or what's driving it. Because I could take a bunch of guesses on what's driving it, but I couldn't really give you a good answer.
Right. And I mean, that's, again, as you're saying this, I'm over, I have the room pulled up over here, and Silvers, who's one of our big SPX guys in the room, sitting here saying, like, strange price action day on SPX options. Premiums went up, selling sped up, preemed right out after velocity and died. Very, very, very controlled selling. And this is a guy who trades primarily SPX and a handful of single names. He's got a really good read on this market. Very uncanny that he posted this, and it's literally 4:24. So as we're recording, that's 2 minutes ago. As you're talking,
2 minutes ago, he's listening to this live. I am Silvers, actually.
We're not even live streaming yet. Turns out. And then he tags Kelly Bett to see what he's kind of thinking. So it's interesting. And that said, I have the AAII sentiment indicator up here. Jay shared it with us on stream yesterday. But if you want, Joe, I can share it with folks so they can see it live here.
So they can see what it is for those watching on video.
For those who can't see.
I gotta get better at that. I probably should show everyone my chart, but I was being lazy. Look at Smiddy being non-lazy like me.
There we go.
There you go.
Here we go. So, I mean, I'll let you guys, I'll leave this open for interpretation here, but, you can see we're nowhere near extremes looking at this, right? And that's something I think is super relevant. Again, going back to the controlled selling conversation.
And you're looking at the dots on there, right? Just so people that are on there, like, and for those that are just listening, this is basically investment sentiment on, investor bull minus bear spreads, investor bullish sentiment, investor bearish sentiment, neutral sentiment, and, go ahead, Smid.
Right. So again, we're nowhere near extremes. I'm taking this right out of Jay's cup of coffee over there, because he was talking about this last night on the call. But again, this is not extreme. This isn't anything crazy yet. I think that if we start to see VIX, and let me pull this up on the back screen, but when we start to see VIX break up higher, 40s, 50s again, then I think that these indicators are going to start getting to extremes. Then I think we need to be worried, right? But again, look at your heat map here.
Beautiful.
Selling across the board, right? A little bit of utilities and energy picking up. There was some buying in the home builders today, which
fucking energy, AbbVie, Merck, Amgen, J&J. That's all it's been.
So, again, nothing crazy on that side. And then I did want to bring this up. This was the McElliott kind of cap that Jay had from back in late February. Same script, get more of what we've been seeing this far. A lot of dispersion, low correlation, choppy upside with rinses like Friday and off DeepSeek news. He's looking at the more violent drawdown off a potential growth scare sometime in Q2, likely when funds have more long exposure and less hedges on. Well, we're kind of getting to that point. And knowing that was a few weeks ago, and we're kind of back to that, and I'm going to kill this share here. There we go. So knowing that's what was going on, that was a prediction. I happened to see that today as I was scrolling through some of those saved images. And I was like, oh shit, what a great read he had. And he, credit where it's due. He usually does have a really good read on the markets. But to see what we're seeing now, the growth scare, I think, has been happening. Are we pricing it in? Right? That's a fun thing that people like to say. Oh, it's priced in, it's priced in. Well, look at everybody who had good earnings, all these tech companies who had decent earnings and then projected lower growth, right? Or disappointing, and they got absolutely hammered, right? And funny enough, one of my favorite names, Oracle over here, missed by a penny again. And next thing you know, they take it higher, which is almost comedy. After I got hammered in December on this thing, we talked about that last podcast where, that was one of our biggest losers of all. I think our biggest loser of all time, this gold trade, even though it was broken up again with three different metals, was definitely a little bit bigger, but that was the biggest single name loser I've ever had. And the irony of watching this thing run after hours, having almost a worse quarter than they did in December, but you just got to laugh, right? You got to look at it and be like, all right, they're doing okay. 150 is a deal, right? We liked it at 190. I think 150 is a good buy here. So
right.
Not yet though. Again, I'm going to wait on this. I'm definitely going to wait on this. But yeah, so to kind of redirect that conversation. Yeah. Something else I was looking at today, just to kind of bring it up real quick. If you want to, do you have anything else you want to add on that, or you want to hop over some of these,
I think from the market standpoint, it's just a wait and see. That's all I'm going to do. The only thing that I found wildly interesting is the JPM collar is going to be becoming we're getting to it, right? So we did it today. Today's play was monster. If you took the whole thing, I doubt anybody did, but long story short here, we were opened at our higher time frame major put wall on SPX. And again, we've been slicing through walls. They are significant, right? Like for support and resistance, but mostly on the upside being capped, right? I would care more in this regime of us being blocked on an upside move because of it than us being bouncing off a downside move. So today we opened right up the wall. It went below, came back up, couldn't break it, sunk back down, and we went straight down from 5,700 to 5,565, which coincidentally enough is where the long puts start of the JPM collar, right? And those are all significant areas to watch. And I'm curious to what happens if we stay below that, like what kind of happens from a dynamics perspective, across the board, because that's a quarterly collar and it ends 31st. So something to kind of look up. It's on our Twitter feed at STEAMROOM Trader. If you guys want to see the chart that I posted, that kind of has like that play, and it's something that I'm going to be tracking over the next couple weeks, and I'm sure we'll talk about on the next podcast. But that's all I really got from the market side. So I'll kind of push it to you, Smid, and what some of the stuff that you kind of prepped and are looking at right now.
Yep, and you are correct. That is the quarterlies are 31st of March. So
yeah.
But no, a couple things, right? So I think last time we were on, a couple of the names I was talking about was VRT and the NBIS, right? Both of those have just been those. You want to talk about tanking? Those have actually tanked from the last call. So kind of tough, right? Because we talked about leaps in VRT, I think privately, but again, that was one of those that I was pretty confident that was going to be a good buy. Know some folks who got into it, and they're not letting off the gas on that one. That said, it had a pretty good run. You look back from 2024, this thing ran from $40. So does it still have more to give? Maybe. Local lows from last year are going to be around 62 at this point. So that might be a point of interest. But we did have some sweeps in it. We actually saw a 42.50 put sweep right at the end of the day today. But last week there was some upside buying. So that kind of caught my interest. Again, when you see some of these bigger sweeps coming in, especially, and these were, we had a couple coming in 1.1 million, 790, 790, 980, 2.1. And these were, different strikes and times across the board pretty much. Looking out, some of them were June. We had 82.50s, 87.50s. We have more Junes at 90. So you definitely have some interest there. Actually, most of these were Junes. Most of those big bets were Junes. And then we had some for 2026. So someone playing some leaps at the $80 strike. Those guys probably are looking fine, if I had to guess. Everybody else might be feeling a little bit of pain on those buys, but we'll see what happens. And just for the listeners, those three of those bets on, what was that, Friday, right? 3-6? Or was that Thursday? Might have been Thursday. But those hit Jay's top bets list. So again, we have an indicator that actually shows some of these sweeps that show top bets for Wall Street Jesus, which is nice, right? I noted a couple other ones today. But I think the biggest one that I saw and one that I wanted to bring up with you, Joe, was Unity Software. So someone hit like a pretty big sweep.
Into my old stomping ground.
Exactly, dude. I thought you'd appreciate this. So yeah, I saw a big one. I think it was what, 1 million? Oh, hold on, give me 1 sec to pull this up.
Unity. So yeah, while you're looking that up, Unity, obviously gaming, software company. It's an engine that you can build your video games in. I worked in that industry with Call of Duty and all of that shit for like 4 or 5 years. Not on the development side, but very familiar with all of this. Anyways.
Right. So they were down. I mean, they were down pretty good today. And I think this person got a decent spot in it. They didn't nail the lows by any means.
Yeah, down 11%.
Fine. Yep. So they hit the June 20s at the $20 strike for 1.2 million. So a pretty big sweep nonetheless. And I'm going to assume that those guys are still hanging out in open interest. I can't imagine that they would have clipped that at this point. But kind of caught my eye. Yeah, they're still sitting over there. We'll see tomorrow when everything updates, but I assume that those guys are still sitting over there. Pretty big volume there. And then you got got a lot of open interest, actually, 8,000 contracts in the 25 strike for June as well. So, and there's some other ones spaced out there. So again, this thing had a nice rinse. It had some good earnings. It's had good earnings for a while.
Great earnings. It's been really good on earnings, and it had a monster gap. And if that's the thing too, it filled the gap today, the earnings gap. So
right. And now at this point, you might give it a couple days, but it's sitting just a smidge above the 200-day moving average. So that might be a good shot. That might be something, keep an eye on that for next, couple weeks. We'll check back in on that, see if those guys are hanging out in open interest still, and kind of watch that one, because it definitely caught my eye when I was like, ooh, this might be good. After a nice tech wash, this company, came from $40, $50 plus, kind of has it's almost got the old Jay's hockey stick pattern here at these lows. It's pretty big range, but again, if it's going to pop, that could be a good one. So something that caught my eye. And then one other one I wanted to bring up, TLT caught some funny action. And, with all the talk about, dude, I know it sounds crazy, right? We're going to talk the 20-year here, but I think it's relevant, because if the administration really does want to get rates down, TLT is gonna have a move. So you had buyers across the board today. Nothing super crazy. We've seen some big swoops.
Yeah, you had one this morning. It looks like there was a $1.6 million bet for November. Basically at the money's 92s. Huh.
Mm-hmm. So again, and a couple smaller bets, peanut bets there, 32, 32, and 28. And again, those are all from March. So you have some shorter dated stuff. The guy who's at 120 for, what is that, September? Or is that October, July? And it's August. We got an August 29. I think he's got something else going on upstairs. But again,
you don't like the idea of us getting to $1.20 by August?
I think if we get
When's
to
the last time we were at
TLT,
$1.20? Let's see.
We got some problems.
July of 2022 was the last time we were at $1.20. But that looks like a lotto, $28,000 lotto ticket.
It's a lotto. It's got to be a lotto, because I was going to say, where were we on rates back then? That's going to be the other side of that. Because if we get to 120, where are rates going to be? Right. You're going to have.
True.
Yeah, I think August of 22. We were sitting at a balmy 0.7%, it looks like, on the 2-year. So I don't know that that's going to bode well for the economy if we have to go all the way back to sub 1% on these. But that said, I do think that the administration wants to get these rates back under control. I think they obviously, with what they're doing with Doge and Musk, they're acknowledging that there's a problem with government spending. I don't think that rates this high is helping. I think we all kind of know at a certain point, we all take out loans. You got to pay back your loans eventually, whether it's 2 years or 30, you're paying on that. I think that they want these rates back down. And I think that they want a shot to, how should I say it? recapitalize their market, right, and adjust their
Right.
books. It's what they're going to do. So that's what I think. But I do, I'm not a big going to go buy bonds and sit on this for a while. I probably should be looking at some of these short-term notes, especially because I'm sitting on so much cash with the client account. But
Right.
where's the fun in that? Come on now.
No, come on. You manage that guy ain't interested in making fucking $5,000,
No.
$10,000 in dividends a month. But
Mm-mm.
anyways, it's interesting you bring that all
Not
up
going to do it.
because I sent you something that Jem Carson had put on Schwab that it kind of plays into a little bit.
Right.
And he went on Schwab, was it last week? And I love Jem. I think he was high as a kite when he did that interview, quite honestly. But I'm
He
also
looked a
guessing
little
he just
toasty.
was like he was super different than how he normally is. And he was like really
Mhm.
giddy. But he was kind of saying that he thinks that this is kind of maybe what Trump wants, right? That he wants to see this rinse in the market, and he's not really concerned about the stock market right now. He's concerned about fixing everything else because the fear that Trump has is the economy is not slowing down. And one way to slow the economy is through the stock market. Now, it's not how the economy actually works, but when you have overinflated prices across the board, then sure, right? There's a big factor that the stock market plays into this. So if you could cool off the stock market, maybe it starts to cool off in other areas too, because they're worried about inflation and everything else. And I thought that was a really interesting. I'm not a macro person, right? I can't act like I am some savant that could talk about the macro. I trade what's in front of me. Like that's all that really matters. But now that we're in a Trump era, the macro becomes increasingly more important. We were able to be lazy, in my opinion, during the Biden administration as traders because we bought the dip and it just didn't matter. And to be honest, I think they were cooking a lot of these numbers as everybody does. But, having traded Trump's last term, and the way things work with tariffs and all these other things, like there's a lot more you have to pay attention to, at least in the short term, until he starts to establish what's going on and what he's trying to do. So I just thought it was an interesting point that Jem kind of brought that up, that, hey, maybe this is what he wants, right? Or like maybe he's not concerned by it, because I'm pleasantly surprised that we haven't gotten some type of Trumpedo or Trump tweet when the market's going down in order to pop it back up. He is just saying whatever the fuck he wants about tariffs and all that shit. I don't think he really cares this time what the market's going to do. But previously, he kind of fucking did. Like it mattered what was going on, and he tweeted about it constantly. So it's just really interesting to see how the dynamic. And again, we're a month and a half into his presidency, so we have a long ways to go. But I don't know. Interesting point by Jem. I was curious if you had any extra thoughts as somebody that watches him frequently.
Right. I do, and this is I don't want to be the tinfoil hat guy, right? But
do it. That's all that matters. Nobody cares. Be the tinfoil hat guy.
Get your Reynolds wrap out, guys.
I love it.
No, I think that there's a window that the administration has right now where they can blame the previous administration and blame any fudging of the data and get away with it and keep their constituents happy and have a little bit of a leg to stand on while the markets are falling apart. Even though it's controlled demolition, they still don't want to say, hey, we just hit the button and blew everything up. We knew it was going to happen. We need to get rates down. We want the stock market to come down. But if they do it in their window where they have a little bit of, how should I say it, almost grace to do it, right? They can blame the other guy, say it was his fault, it was his administration, and then they get to pump this up for the next 3 years. And then at the end of that 3 years, he gets to pat himself on the chest and say, look how good of a market I gave you guys. Look at your 401ks. We kind of saw this at the end of the last, administration that he ran. I think that that's what he's setting up for. He's playing a longer game here, right? He's got, turmoil in the Middle East essentially to settle down. He's got the Russia-Ukraine situation, and we have China-Taiwan. So he's got a couple other angles that are going to take a lot longer to settle. When those things settle, I think that we see more buying in the US markets. I think that there's going to be a bit of, look, the peacemaker's back. That's just my perspective. That's how I kind of see the globe right now. But I think that that's what they're scheming on. If I had to guess, this guy wants to play a bit of a longer game. And that said, it's going to bode well for whoever his next candidate is, right? Whether it be a JD Vance or they've got someone else, kind of in the chamber that they're getting ready. They want to hand this off and continue, a Republican candidacy into the next 4 or 8 years if they can. I think that's what they're setting up. It's really tough for us as traders to see that bigger macro perspective.
Yep.
And there's speculation there. 100% there's speculation. If you just watch how this guy dances, you kind of learn the way he likes to move. And that's what I'm seeing. So it'll be fun to watch. We can touch back, we'll have plenty of further episodes to touch back on this and see, there's going to be other smart folks who weigh in on it. And I love the macro game. It's really fun to listen to. I'm not a macro pro by any means, but I try to stay
it is fun to listen
top
to,
of game as much as I can.
Yeah.
Yeah. But that's what I think is going to happen. I think that, I think these guys are willing to kind of take they want to take the beating up front and then come back in the 5, 6, 7, 8th round for the knockout. And then and then they walk away the winner.
Yeah, and on top of it too, I mean, the difference here is you can't get reelected. So
bingo.
Don't have anything else that really matters in the grand scheme. Say, oh, I have to do this because I need to get. I think that Biden and all them were actually, and again, I'm not trying to really get super political. It's just how it relates to trading. I think that they wanted to kind of cook as much as they could in the markets as a way to signal, look at how good this was, because they're going to use it now. I mean, let's be honest, Democrats going to use it against Trump and say, wow, look what you did to the market. Not realizing that it's, again, this is the long-term game. What's going to happen over the next 4 years, right? You have to undo a lot. But I think that your point's really valid. I think there's an interesting dynamic that's going to be outplayed or played, by the Trump administration right now where, I would agree that I think that they're going to use this as a way to kind of reset things and then pound their chest later and say, hey, look what I did. Look at your 401ks. And it would fit with the Trump tariff chart I keep seeing on FinTwit all over the fucking place, even though it's a little bit of a different regime. I was like, oh, we've been through this, right? Trump tariffs, we go down, then Trump tariffs 2, we go up, and all this other shit. But I think this one's a little bit different with how the macro is going to play out, but it's interesting nonetheless.
Well, and imagine just real quick that he, we get the old, never mind, we're going to, Mexico and Canada are tariff-free. We don't have to do that anymore. And all of a sudden,
we'll rage. We will rage.
5,900 will be 5,900 in a day.
I will make this call now. When we do bottom, right? I don't know when that will be, but when we do, I think you're going to get a few elevator up days when people start buying hand over fist a lot of this.
Right.
And again, I have no idea when that's going to be. No clue. But I don't think there will be some really volatile days up, just like we got these volatile days down. Right. That's not like a wild call. I think a lot of people would say the same thing. I just think that it'll be a headline that'll spur it, and then it just has to be sustained, right? I can't get excited about going long yet on a lot of this as much as I want to for that exact reason, because they have sold off everything. So I need to see consistent over days. And if I miss the initial elevator, 100, 200 points on the SPX, like, so be it. But that kind of brings something that I wanted to bring up to you too, unless you had something else on that topic.
I just wanted to add, I think as funny as it is, last administration, we had headline risk that was primarily to the downside, right? If the administration came out and said something, did something, war broke out, North Korea shoots a missile over Japan, Nikkei's down 2%, right? Now we have Trumpito headline risk both ways. Yep. It can be an upside headline where tariffs get cut and you get 3% up days on the NASDAQ because people are going to be excited. The economy's fixed. We're not in a trade war. So that's something I think, again, all of us as traders need to keep in mind is that this guy brings both way headline risk. Whereas I think for the past 4 years, a lot of us were complacent in the, you only had to wait for a downside, right? You didn't have
that guy wasn't coming out with any headline. Upsides. Yeah, that guy wasn't coming out with any headline to sink the market.
Right. They needed the markets up. They wanted to, and I guess the August drawdown was probably one that we could look back, but realistically, that was probably in hindsight. Yeah, and we went to fresh highs, and then you had the election. We had the election going into pretty much fresh highs, if I'm not mistaken. So it's like, hey, that worked. We needed that, almost methodical rinse so that we could pump it to the next high and get everyone suckered short and then bring it higher, which we did. But yeah, I think that's something, listeners keep in mind is that you're going to have both way headline risk with this guy. He's not going to make it easy for you to make money. Get your system down. You got to have conviction in your plays. It can't be, 0-day gambling is going to be a lot tougher, especially if you don't know what you're doing.
Yeah, that's a good point, especially like because that's what I mostly do. A lot of this is you got to be quick, like you got to be in and out because you're one headline away from your position kind of blowing out, and all time frames matter, right? Like there's people that have a lot of money that might be smaller size, willing to ride something. Me, I'm looking to get in pretty quickly with some size and get out, and take profit, across the board. But it's I'm not sitting there trying to go long and sit there because you're 100% correct. We are one headline away from going in the opposite direction of my play or me getting lucky and it going in the right way. We've seen that a couple times in the past few weeks where you get a headline and then people are like, oh, see, I told you. And I'm like, you told me that Trump was going to tweet something about tariffs that was going to send us in this direction. Like fucking just acknowledge the fact you got lucky and you were in the right place at the right time. That's fine. That's part of the game. I'm not mad at you for that. Just don't say you called it because you fucking did it. Right. Nobody knows. But that's what's most interesting.
Nobody likes a told you so ass. Don't be a told you so ass.
Can't stand that shit. But we will be I told you so asses at some point later on just because, it's fun for us. But kind of taking what you were just saying there, what's been a really interesting dynamic that's kind of playing out. So for those that play options, you'll probably find this interesting. So I do this tracking. And it's not just me. There's a couple people that do it. But all of Wall Street Jesus is like top bets that he marks from options flow every day. Now, top bets are just like, this is the best action of the day. It doesn't necessarily mean I would buy this. Like that's really, I have to caveat this and I have to preface this so everyone understands that that's not what it means. But I just pulled up the spreadsheet and I was looking at it today to see, okay, what in the last 2 months, month of flow is actually paying because we were in a regime where everyone was just buying to go long. And it's tough, dude. Like this spreadsheet is brutal. Like people that were playing BBAI calls for fucking May, they're down 80%. Marvell, right? Marvell and this week or 2 week mark from now, March expiration. These were bought in the beginning of February. And again, I don't know if these people held them or closed them or roll them. I'm just saying in general, this is when it came and this is how much they'd be down. They're down 75%. Like it's nuts. But if I look at the more even recent plays, right? People were buying RKT calls, today for a bounce, or was it yesterday? Let's see. They bought some on Friday. Like there was some that bought on Friday, and then there was news that came out today that they're acquiring somebody and like ripped down in one day.
Redfin, I think it is.
Yeah. Just torched.
Well, dude, Redfin's up. When I saw on Bloomberg out in the living room a couple hours ago, Redfin was up like 67%.
Yeah.
So you just got the wrong side of the trade there.
Right. And it's just I'm looking at everything else. Like the only one that is actually up in the last week, like that have been bought in the last week that are actually up is ASPI, which is a nuke speculative play. It's a cheap stock. Right. And they're, CB's up like 2%, SBLK up 3%, but everything else is just negative. And what I'm driving at is even the action we're seeing is really, it's tough for me as a trader to want to go and play some of this, even whether it's down. These are not just calls. Like some of these are puts and all that too. It's really tough to get excited about anything given this, market. I mean, I'm looking at all these top bets and they're just losing. So people are losing hand over fist on a lot of these plays. Like they just are. And again, you don't know what they're doing elsewhere and other stuff, right? But it's just, I've never seen it like this since we started tracking this over a year ago, right? It's never been this bad with losers, which means most of so what I take from this when I look at the options flow is I don't give a shit. Right? It sounds bad to say, right? But for me and other people probably find value in certain ones. I only care if it's a super big size, not in a Mag 7 name, because the big size and Mag 7 names happen all the time, right? Like similar to what you call a TLT, seeing a couple $1 million in TLT is a big something to pay attention to and watch.
Yeah.
But I want to see that, or I want to see time.
Right. If I get 3 more of those TLT sweeps, I might sit there and say, you know what, there might be something to this. Right. And that's right. And then I want to look at that further. But right now it's like, all right, got the flag up, right? The flag's up. Hey, yellow flag. Someone's got something, that they're thinking about here with some size, right? That's, $1 million is a decent amount to throw around. They've got some time.
Right. And that's what's important. Like if we go back and we look at a lot of the best plays that have kind of happened, and again, I'm going to always remove Mag 7 out of this only because there's so many options that go in there. I don't put much weight in Mag 7 sweeps anymore. Me personally, there's a lot of people in the room that find a lot of value from it. It's just my style. I care more. I've gravitated more towards Jay's style of trading, where I want to see something catch size over time. Oh, and I want time on it with an order. So like, we were talking about J&J. I think last time, or even if we weren't, someone bought $5 million worth of call sweeps in December and then closed them like 2 weeks ago. And if you look at J&J, J&J's been a fucking rocket ship up, right? And it was a banger trade. They turned $5 million into $10 million, right? They doubled. And if they would have kept holding, they would have tripled it. It would have been worth 15 million now because it just kept going up. But that was size, farther out expiration, and the market regime was at that time. I mean, you'd be willing to take size. I'd be surprised to see someone come in now and take a large bet on stuff, even though we still do see it every day, at least in the Mag 7 names. I can't tell you how many Tesla $1 million sweeps we see on a daily basis now.
I mean, there was three in the last 2 hours of trading.
I just don't care.
Yeah,
I don't care.
Some $1 million sweeps. Oh, dude, listen. I couldn't do it either. I think that for me, when Tesla's working is when it starts to catch some momentum, right? So it's been selling like crazy, right? But you almost need some confluence there. And that's an easier one because you've got Musk on Twitter. So he's coming out and saying, oh, we're launching, robot taxis, or we've got a robot, or whatever his next, what I'm going to call Ponzi is that he decides to launch. And I know some of you guys are going to get mad about that, but these products are nonsensical. But anyways, he's going to come out and say, hey, we're launching this new supercomputer that can clean your whole house for you. And people are going to love it. And they're going to run it up to 300. But the days that you see, 90% call buying in Tesla are the days that I think that flow starts to matter. And then you look at those bets and say, is it just sheer momentum? Is it just the gambling, right? Like there's that Wall Street bets aspect where some of these folks are just YOLOing an entire account. And I think that's what matters in some of the mag names where you actually, you're getting momentum, you're getting flow, and the market's happy, right? And that could just be throwing a fucking dart at the board. And you are having, you hit 17 and you're like, all right, right on, dude, I'm pretty good at this,
Right. So and I think that's tough. It's difficult too because it's like a mind change too. We came from an era, last year too, where on a lot of these mag names, you could just keep buying. We've said it ad nauseum now, but you could just buy the dip. Like people were just doing it like crazy. I mean, Tesla had a wild run, especially into the election and then after. It's for a company that has no fucking earnings. But yeah, it's just different beast. It's just even like the names that should be strong on, like the Googles and the Microsoft, which is usually what I go to when we start getting like these downticks, or even Amazon. Amazon's like PE has come down significantly from a lot of the higher that it was at. I think it's gone down like it's 36. It's come down.
It's not crazy. It's not crazy by any means. Tesla is a 128.
Yeah,
and we're talking about a company that actually makes money versus a weird car tech company or whatever.
Right. And that's what's like, if I'm trying to like find my silver lining in all this, my trades are going to stay quick and fast. And I'm looking at a lot of these more so for longer term portfolio, right? Just saying, hey, I might get this at a discount, or I might get this. Like I did go and buy more of the index today for a longer term, portfolio, right? I did, right? Because I don't know when it's going to be. I'm like, we're at a decent spot. Even if it kept going down, I don't care. I'm just lowering my cost basis like I usually do. So, that's a wrap. But the only one name so far that has actually caught my eye in the last 3 weeks is CFLT.
Saw some bets in that. I was looking at that earlier, actually. Yep.
Confluent. It's seen repeat buying over since like mid-February and more even now. So people are playing 2027 leaps. People are playing March calls. If I'm playing it, it ain't short term. I'll tell you that. It's going long term, but it's still a falling knife, and it filled a gap today. And I think I'm not excited to buy it yet. It's just something that I'm watching. That's all I'm really doing with all of these is just kind of watching and seeing kind of what plays out. But people were excited to buy this when it was at $30, and there was a sweeper that came in and was excited to buy it at, again, they're all at $30, most of these. So we're now at 24. That's a discount to me.
Yeah. There we go.
But I have 600 and something days of time if I decide to take it. But anyways, that's just something that I've been kind of looking at and seeing if that makes sense. It's just I won't buy it as we're fucking dying. I need to see some stability across the board, and we'll go. But this is where you shop, right? This is the time we're going down for you to make a list of things that have interest into you. So I mark down all these orders that I think are interesting, and I track them. And I say, okay, if we start to settle or find a bottom, because there are names that are going to run despite us going down, right? Energy,
right.
The fucking, we'll say staples for the most part, but J&J, Merck, AbbVie, like AbbVie, fucking stupid the fact that it's still going up. But those are the names. Today. Yeah, go look at AbbVie. Go pull an AbbVie chart up. It's just Jay and I make fun of it constantly.
Crushing up to highs, it looks like.
Right, and it's wild ranges. It's wild ranges that you're getting on this thing, still for today. But it was up another 1%. I mean, it's a grind because the indexes aren't helping it. But
230.
It's good. Like that's what's working, right? Just being a stock picker. This is not a stock picker's time. It's just not.
No. This is not an easy market.
It's another fool's game.
Mm-hmm. I like that confluent, man. You almost have, looking at the weekly, kind of zoomed out to back when they brought this thing public. It's got a nice little hockey stick there.
Well, shout out Marsh.
No, that's like shout
out Marsh.
His IPO.
This is a Marsh stock that he sent me. For those that don't know who Marsh is my resident leap quant.
Yeah, nice.
I love him. He's great at finding these, and he's an oddball. He'll go find anchored VWAPs from IPOs from 1980 and 1990 and try to find immense value. And I love it. I think it's fantastic. But something to watch. So that being said, is there anything else that you kind of were looking at that you wanted to bring up?
No, that's most of mine. I mean, the other big thing that I noticed today, just kind of looking at the RSP, S&P 500 equal weight, this thing's not doing too shabby. And that is just interesting to me because I think a lot of what we're seeing is unloading in the big names, right?
Yeah. NASDAQ was down what today? 4% at one point?
At one point we were down, I think 4.5%, which I had to go back and look. And I was really starting to think when was the last time we actually saw this? And COVID was the last time that I went and kind of looked on the daily and we had some days where it was down, on the NASDAQ side, 5, 8, 9%. A lot of those days were in that, post lockup kind of headline. And you'd get these 9% down days and then 9% up days. That said, that's when the NASDAQ was at 9,000, 10,000. We're almost at 20, right? So the amount of points, right? The range there is vastly different because it's still 800 points. You're still having these 800 point down days. And how do you risk manage that as a trader? I think that's what's difficult, right?
Yep.
Obviously, margin requirements are a lot different now than they were back then. But still, it's as the trader, there's a lot of opportunity in that. But that's the last thing that I really had was that RSP is not getting hammered like the S&P.
No, I just pulled it. I just pulled it. So year to date, RSP is down 1.2% if I got the right information. On the year to date. I mean, Google says something different, but I'm just pulling on TradingView this chart. But
I got 1.2 over here.
Yeah, 1.2. SPX down 4.33, and the NASDAQ down 7.35. Right. So this is what this tells you is similar to what you were saying, right? Like there is rotation going into certain other names. RSP is not getting murdered, and the unwind is good because it's coming from a lot of the QQQ names, right? It's coming from the NASDAQ, as it should. I mean, the some of the run-ups that I'll use Tesla's always an example, but Meta was the one that confused me the most, right? That
you and me both, man. I was in it. I was in it from 616, and I got out at 640, 645.
That was just my best trade That was my best trade of the year.
Oh
I
yeah,
think it was a good one for you because, and again, this was equity and it was a longer term portfolio. So I'm not going to call this like a day trading thing or a swing trade or anything like that. But I got in off the earnings dump last year in April when it went from 500 down to like 429. I bought that dip immediately because it was a longer term play, and I don't know how long it's going to take for it to get to a thing. And then I sold it right before the last set earnings, so I didn't catch the run up to 740. I got at it like 650, right? Still, banger
amazing
trade. Over $200 a share on each one over basically a little under a year. But the run that it had post earnings, right? Or right before earnings, then post earnings, still to me made no sense. It didn't. Nothing about Meta screams that type of price, and
I mean, it was almost like we had Zuckerberg at the inauguration, and I think that's all it took for people to get that excited of like, he's got a backroom deal with Trump, and then rocket ship.
Right.
I think that was a lot of what we saw was that.
Yeah, he was on Rogan a bunch of times too. He's kissing the ring. Just
right. But logically, business-wise, has their business improved? To justify that kind of move there, like
as someone that got pitched, as someone that
20% move from where I played it.
Right, and as someone that got pitched so many metaverse projects back in 2021, 2022 during the last like crypto bull run, and Meta changed. I don't even remember when they changed their name, but back when all that shit was going on. This is just unreal how delusional people were with a lot of that shit. And then when they did it, I was like, how much money did you sink in? Not that it matters. They make a bunch of money on Facebook. Like his numbers he put on Rogan were crazy when he's saying how much money they make per user and how much people are active and on that. Like started with our generation and now is basically like semi-owned by the boomers that, want to rant about how their mailbox fell over or a dog shit in their fucking lawn or some other crap. But it was just it was interesting because I was like, wonder what you're innovating. Like what's the innovation we're getting from Meta? Because it ain't the metaverse. It's not my guy. No. I'm sorry. But I digress. So that brings us, I think, to a new segment fresh to the show that I'm really excited to do. One of other bunch of segments I have going in my head, but this is what we're going to do is reoccurring. And I am calling it Trade or Fade. And the way that we're going to do this is we are not that we're going to be assholes, but FinTwit is a wonderful place. It is a giant fucking casino. For those that don't call it Twitter anymore, it's, X, whatever, you know what I'm talking about. And I thought it'd be really interesting if you and I would go and I would pull some of these bets that I see. And some of them might be wild. Some of them might be normal. And I'm not trying to poke fun at anyone by doing this. I think it'd just be cool if we look at it and say, I like that. I would trade it. And again, preface here, disclaimer, this is not financial advice. We're not actually going to make these trades, right? It's just, this is a fun game. And we're going to see who has a better read of the market and some of these trades that these other people are taking. So we'll say trade it or fade it. And today's lucky person that we are going to look at trades for, and to keep this honest, we're only going to pick trades that they took today, right? So we don't have bias imparted to saying, they took it 3 days ago, is our good friend that is getting a lot of shit lately on Twitter, Mr. Banana Stocks, Banana 3. Okay? So, Smiddy, I am going to go through and I'm going to tell you, and you're going to pull up your chart real quick and you're going to take a little peek ski because I haven't actually prepped you for this. In the future, right, I probably will, so you have like a better idea. I'm not just putting you on the spot.
No, this will be perfect. I liked it. I kind of like the random nature of it because now I can just pull it right up and be like,
you're going to pull it up, take a quick peek, see what you think. And you can talk about it as much you want.
So, what do we got here?
I'm going to start right now with Banana Stocks took MSTR March 14th. So this would be end of week calls, 275 calls. So right now, as you're looking at it, just to give some color, MSTR is kind of sitting at the bottom of what looks like a support, depending on how you look at your charts. Right. It is trading at 239. And Mr. Banana Stocks, is playing March 14th, 275 calls. He bought
March
5 of them
14th,
at 1050.
275.
He bought them for
I'm
10
going to
bucks a
go
piece.
ahead. I'm going to fade him. I'm going to sell him those all day long. What kind of premium are on those 275s?
$10.50.
Oh, dude, see, that makes me want to sell those even more. No, I'd say there's not a chance in France or Germany that he gets paid on that. No way. I don't think it's happening. I'm gonna fade him on that one.
You're gonna
sure.
fade Mr. Banana Stock. So Smiddy is going to fade the MSTR March 14th, 275 calls. And I'm going to track these, which is going to be awesome. And the next time we do this, we will see how good you did. And we don't know when this guy's going to get out. He usually posts when he gets out, which would be, helpful to see. But I think it should be pretty obvious whether or not, someone's making money on these. Is there any particular reason why? And I love this one because it's a sailor stock, and you and I love our Bitcoin. So any added words?
I've had a Bitcoin chart that I've been sharing with the room for, I don't know. I shared that chart the entirety of 2024. We had major resistance at about 73,000, right? So we had that. We kind of pulled back for a while, ping-ponged, finally broke it. And that was the election. I've been also tracking the election VWAP from there. I think that we're probably heading back to 73, logically, the way that this thing likes to trade. I don't see any buy side. I don't see any retail who's got money to buy Bitcoin right now. I think a lot of folks are trying to decide whether or not they're buying eggs or filling up their tank with gas. I don't think they're worried about buying any more crypto. The people that I do talk to who are interested in buying a little crypto are usually pretty high net worth individuals who are throwing 25, 50, 100,000 at it and have a 5-year horizon and don't really care what it does in the next year, right? So if I were to go talk to one of my neighbors right now and ask him, hey, dude, are you going to buy some Bitcoin here on the dip? He's probably going to be like, no, not a chance. That's my logic. I think, and we'll check in a couple of weeks. I think we see 73 before we go back to 94. And I know that's a huge range there, but that's the way that Bitcoin likes to trade, right? We might have a nice pop, I'd say that, but he's 314s. He's got 4 days. That just doesn't seem.
Yeah,
like
what does he get? He's buying he bought the 275s.
Yeah, 275s, but he's got only a couple days to make that happen. I mean,
yes,
the stock was down $48 today, so fair enough. It could happen all day tomorrow, right?
Yeah, and the thing is too is when this was posted that he bought them, it was 8 hours ago. So what would have been 8 hours ago? It's 5 p.m. now. So he would have
would have been like in the morning, like at the open almost.
That fucker is getting absolutely killed.
Oh yeah. I'll double down. Let me double down on my fade.
See, now that we have the hindsight on it. But anyways, I would have, again, I didn't give you that context before, but I'm going to agree with you on this. I would fade this play for sure. So that's MSTR.
Oh yeah, he's already down 50%. They're trading, bid side's 415.
I love this. This is already great.
So
for me.
he's
he's
having a tough time.
And I'm not going to look at the time for any of these two. So the next one is, and we'll do I don't know, do a handful of these, maybe like 3 or 4. He got Meta March 14th. So again, end of the week. 615 calls, and I'm using this one because I was just talking about Meta. The 615 calls, and he paid 1095 for them. Again, I am fading. I will sell him these calls. I am not taking them, and the reason for me is much more of the macro picture, of the index picture. These stocks are only going to go, especially the Mag 7, when a rotation wants to come back in and the indexes start moving up. I don't think we've hit that bottom yet, in my personal opinion. If I'm wrong, sure, no problem. I will bite my tongue. Actually, I won't. I'll say, good for you. You got it. I just don't feel comfortable sitting there on the FinTwit space telling people that I'm doing all this, because people do follow these calls, right? And I get that. Right. He's telling people not financial advice. I'm not shitting on the person. I don't know him really at all. It's just he's the victim today for trade or fade. So I'm going to fade these calls. I don't think we've hit the bottom. I think that there's more pain coming. I think there still needs more of a rinse. You know, and again, to get to 615 is not a crazy move in meta. You know, it easily could happen and we get a relief bounce tomorrow and, you know, he gets paid. It's just for my risk appetite. I'm going to fade this and, you know, we'll see. Maybe he'll make money. He won't. What do you think about the meta March 14th, 615?
I mean, again, I would sell on those. I'd sell on those. I'd fade that trade. I think, you know, to really get paid on those, are we expecting we're going to have another, you know, we're going to have meta up 5% tomorrow? And then even if we do, we're going to need to see that up again another good chunk the following day. I just, in this, with what's been happening for the past 3 weeks, I don't think that you're going to get that. And trust me, I say that as someone who wants to buy the dip in meta for longer term, right?
Yep.
Like I would love to buy some leaps here and say, you know what, we're going to 800 this year, sure thing. But I'm going to wait for the dust to settle. There's a couple little things I'm looking at that if we hit 570s, 572 or so, then I would start saying, hey, this is where I actually want to take a shot.
Yeah. And I think the difference too would be time, right? Like the time component's so important here. March is going to be a tricky month to trade in general with OPEX coming later on, or VIX expiration, and everything else that we kind of got playing on. Like this is a quarterly expo, right? There's going to be a lot of moving around. There's a lot of gamma on, and a lot of these different strikes that are kind of going to have to unwind. It's just, if I'm going to take something, I want to have a much higher probability. So it's just much easier for me to fade this shit than be the person that said, I told you so and I got it right, because there's a higher chance that you get your fucking face ripped off. So that's meta. We are both fading meta.
Yeah. Fade the meta. I would feel better at 600. I would maybe take a shot on the 600s.
Yeah, with more time. That's a better spot. Like next week.
You're $2 away from that. You close $2 away. I mean, post it's down actually to 592, so you're starting to get a little.
I have it off, so I'm not cheating. So
down a little bit. They're still selling it a little bit. Yep.
So so that's meta, and a lot of this too is the cost of these is just too much for me to get excited.
Right.
You know, you're gonna fight
premium's pretty juiced up. Yeah. Right, and that's the other like on a you've got their weekly expiration. You're going to have to be real tight on how you trade around that, or you're going to have to really risk manage that. And if you're already down tomorrow at the open, if you're just flat for the day, again, you're losing premium there.
Yep. So then we'll go to the last one, because he bought a bunch. There's like some NVIDIA, there's some Oracle. NVIDIA is going to be similar to Meta, right? And you're playing a bounce and semis or something else. And then Oracle, I think, had earnings, so we can't do that one. But he did a firm. This one's more interesting because there's some time on this. Ooh. He bought the Affirm March 21st 50 calls, and he paid $275. Which, again, we're saying the premium because the premium is important. If it's a cheaper play, I might be like, yeah, you know what? I might have gambled that, or I might have made that trade. If it's costing me 20 fucking bucks, I need to have a lot more conviction. So Affirm
and what
50 calls for March 21st.
50 March 21s. You know what? I'm right off the bat, I'm going to say I would trade this one. I would actually take this trade.
It.
I kind of like this. I like the setup here. I'm not a big moving average guy, but we're hanging out right at the 200 day, which is kind of a nice spot just to,
right.
Maybe 2 weeks is a little short-sighted, but I would say this would be a decent spot if you wanted it and liked it. Yeah, I would take a shot here. And it sold pretty hard the past few sessions. So again, you get a nice bounce.
That's what I'm looking at now too.
What's the short interest? Is there any big short interest on that thing?
Good question. Let's see.
I'm gonna check real quick. See what we got.
Well,
nothing crazy.
I mean,
5.4%. So nothing too crazy.
I like Affirm in general. I think I liked they had blowout fucking earnings, really, at least from an EPS perspective, and they were up, on revenue. Our country's personal debt is not getting any better. And Affirm, I think, is playing a big role in the buy now, pay later shit, which is good for the stock, bad for America.
For people, yeah.
I would actually, dude, I really want to disagree with you, like, so badly, but because it just makes for better content. But I got to be true. I don't hate this. I think only because it has time. If this was even like the 48s for this week, I'd probably fade it. I think that this thing has really started to sell off. If we do get any type of relief, again, there's some index stuff that has to play. But given what's you got going on, next week with these, I would trade it. I don't hate it, especially because the premium's not overly expensive, even given where VIX is at. So we are in a full-on lock, full-on agreement in the trader fade. We're both fading the MSTR 275s for this week, the Meta 615s for this week, and we are both trading the Affirm 50s for next week. And the good part is by the time we record again, we'll know the outcome of all these, and I'll be watching Mr. Banana Stocks to determine what it is. But yeah, that's trader fade. I think I like that. That's cool to me. It'll be interesting to see how it plays out, but people make these fucking calls all the time on Twitter, and I think it's cool, not necessarily to put people in their place, but just say, all right, well, we're going to find out really who's got a good eye for shit and who's doesn't. And if we have better reads than them, right, on a lot of this.
Right. Absolutely. I love it. I think it's a fun segment. We'll keep doing it. I might have some trades here I'll share with you guys, and you guys can trade or fade.
Yeah, there we go. That's what I like. What's Smiddy buying? Oh, he's buying gold at the top. Fade it. Fucking fade it.
Bingo. Oh, you would have got paid. And I think a couple guys in the room were short gold. So I think some guys, unfortunately for me, fortuitous for them, got paid off my blood in the streets over there. But that's the game we play, right? That's the beauty of it. And we're here to keep each other honest. And I think that's the segment, is actually looking at this and saying, hey, it's easy to get on the internet and, type it up over there and say, I'm doing this, I'm doing that. But it's kind of interesting when you've got a little scope on you. It's why, part of these live streams and why we post as much as we do in the room. It's fun to be held accountable.
Yeah. And that's what's important, right? Like we have this big mantra, especially in our room. And, I know that we always talk about the room, and this is not necessarily like supposed to be like an ad for it, but I'll say this is more of a generalist term. I care more about someone showing me how much money they lost than how much money they won. If you could show me your losses and you could do that, then there's being much more genuine, right? Like someone like you, especially, and I'm not trying to blow smoke up your ass, but you easily could just post all your winners with how big your size, and people would just think you're a constant savant, but you post both. And that's what's important is, when you have a bad day, you lose $1 million, it takes a lot of guts for you to come to people and be like, yeah, I lost $1 million today. I lost 700K, I lost 50K, whatever it is. Is it really shows like kind of the human in the person, and it makes me want to trust you more, right? Like I trust people more if they're willing to show it. That's why I actually found Lucci and all them, because he was posting on YouTube like up 2 million, and I'm like, wow, this guy's crazy. And then he goes down 1.4 million the next month, and he's like fucking selfieing himself in Puerto Rico, walking around, and I'm just like, that's what's real. That's what's important to me. I want real people talking real trading. And that's what this is, like you and I conversing. It's just our opinion. Some people are going to think we're fucking idiots or knobheads or whatever. I don't care. It just doesn't matter to me. This is,
I might be. No.
You're probably right. Right? You're probably saying you're a better trader than me and know more about the markets, and my opinion sucks. That's fine. I don't give a shit. Let's go trade NQ contracts 1 for 1, motherfucker, and see who's going to be better. Huh? You want to fucking come on?
That's right.
Bring it.
And then we can box afterwards.
I'll dust you on that 1 minute time frame. You think you can scalp? You haven't seen my 1 minute scalps, motherfucker. No, I'm just kidding. That's just what it is.
No, absolutely. And I think the accountability is it's what's key, right? Because I think at the end of the day, you can go out there and you can be accountable to yourself and other people. Like, it makes you a better person, right? And I think it's something we all need practice in, and we all have to be accountable on a daily basis, first and foremost to ourselves. And at the end of the day, when you do that, you can do it with other people. And it fucking sucks on the days that I've got to go post these losers, but there's a bit of lightness that comes from it. It's a nice way to almost vent and be like, oh man, I'm sure there's some folks in the room who think I am a savant, and it's humbling the days that you have to go in there and be like, yep, I'm down a big one. This sucks. I'm going to go pet the dogs, go take a break. I'm going to go take a drive around town. So that's part of the game though, and I think that's the beautiful thing. I always liken this to sports, right? I'm not like a huge sports person by any means, but when you trade in the markets, you're trading with the best and brightest. Yeah, well, hey, love race cars, but hey, what are you going to do? But no, you when you're trading, you're playing on one of the biggest fields with some of the best and brightest, and you don't show up to go play against the LeBrons of the world, the Messis
Right.
of the world. Name your favorite player. You don't show up to just play against them on any random Tuesday, but you
Right.
show up tomorrow and it's going to be a random Tuesday, and you've got to play with the big boys at Citadel and BlackRock and all of these big firms who've got unlimited resources, some of the smartest people on the planet that they get to handpick. And your job is to win, right? Your job is to try and outsmart those guys and outtrade them. And it's difficult. I think that we don't give ourselves enough credit in the times that we're right. Like, yeah, you made money, but there's a little bit of an ego check there that we all should, you get to tick that box and say like, hey, I outplayed the LeBrons of the world today. Like, those are great days. And we've had some people in the room who had really fucking bang on starts to the year. And that's what I think of is I'm like, you're playing, like you should be trading in a big firm, right? And you're a retail trader who's just trying to, make some extra retirement money, maybe buy that Porsche you've always wanted, So you got to respect that. And I think the accountability is amazing. It's part of, part of how we found each other. And now we're doing this.
Yeah. Which is exciting, right? This is what it's all about. But, so what I also wanted to do here at the end is, if anyone has any questions for us or topics they want us to discuss or anything like that, like, this is going to be a fluid, free moving, show. Some days we're going to talk about what's going on. Some days we might nerd out on a certain topic. I'm dying to talk about gamma here at one point and flex a little bit of my knowledge level on some of that stuff. But, we're open. So if you have any questions or if you really want us to fade or trade your fucking trades, we are going to be recording. Our next recording will be on March 31st. It is a Monday after the close. So you can email us that day, or that Friday, whatever you want, what your trades are, and we can see if we'd fade them or if we'd trade them. But if you got questions, email us anything you want. marketmisfitspod@gmail.com. And make sure you guys you subscribe on YouTube, you give us 5 stars on Spotify. If you give a 1 star, fuck you. We'll catch you guys on the next episode. Smiddy, always a pleasure to chat with you. I'm excited that you're going to do this with me. And we'll catch you guys in 2 weeks. Oh, wait, I was wrong. I can't fucking look at a calendar. Our next recording date will be March 24th. I'm a fucking herb. Don't listen to me. It'll be the 24th, and then I'll be on a cruise after that, so we'll have to record 3 weeks after that. But anyways, disregard the 31st. I'm a dipshit. I'm not going to edit this because I don't really care. And we'll catch you guys on the next pod on the 24th.
Oh, man. Thanks for having me, Joe. Have a good day.
Yeah.
I'll talk to you soon.
Later, brother.
Peace.